Good morning, everyone. Welcome to the room. As you know, trading futures involves risk and is not suitable for all investors. The information in the presentation is for educational purposes only. It's not a trade signal service, not intended to be financial advice. Hope everyone had a great weekend. Off to another week in the markets. All in all, things have been chugging along pretty good. Lots of open space above us. Every high is an all-time high here in the E-mini S&P. You get these big round numbers, 2,500, 2,550, 2,600. And then the daily targets, that negative 23 is 2,520. We're well above that. Approaching 2,575 would be the next level, 2,573 to be exact. So as we head into today, usually a bull flag, if it's going to break out, is 3 or 4 days of sideways. So yesterday was the third day. Today would now be the fourth day. Or you could count it as the big body candle is the first day, or is the run. And so the first day of moving sideways would have been Friday, second day yesterday, and then today is now the third day. But nonetheless, we are in this nice little bull flag formation and looking for that to break out. Yesterday there was some selling, but there was also buying into the close, and that is a good sign. We're going to open up a little bit higher today. And so any move above yesterday is at 25.50, and then the all-time high is a 25.50.75. So very close. If we just, for kicks, look at the 24 hours, pretty much the same scenario. I'm going to mark those two highs. And what I want to see this morning, do we get another situation like yesterday and Friday where we have a little bit of a bounce in the morning and then right off the open and then selling off in the morning? Yesterday we moved higher just briefly and then sold off right away. Or is there follow through from yesterday's rally, and if this gap is able to continue, so we either come down and fill the gap down at 25.44s or rally right from here. So in terms of a gap trade or gap rules, if we gap and go from here, then I wouldn't really look for any sort of major retracement because we are gapping up, but we're still within yesterday's range. I am not going to initiate the 5-minute play. You could say, well, we're close to highs, or you could just judge it based on the size of the gap. You can use your best judgment and go back and make some observations yourself. Maybe take some notes based on the size of the gap itself, and you could say, okay, well, Anytime the gap is more than 4 points, I'm gonna bracket that first 5-minute bar, regardless if we break out above or below the previous day's range. But my sort of framework is I like to take that first 5-minute play, bracket that first 5-minute bar when we're opening above or below the previous day's range, just to give that extra divergence in the previous day's price. So at this point, there were traders participating yesterday at this level. If we had opened at 25.52, well, there were no traders participating, so people are either getting a gap up in their favor and their positions are increasing strongly, or the market's opening, they were short from highs and they just got stopped out. And so there's a number of things that could push the market higher. And then on the flip side, if the market gaps up and people say, ooh, things are looking pretty hot, and I've made a big profit, I'm gonna cash out up here, and all of a sudden a lot of people start cashing out, then the market can start selling off. And so there's not really a right and wrong way as goes with trading, but I like to see at least a move outside of the previous day's range. Market breadth and advanced decline line nice and strong this morning. Sometimes when we open up like this, where we get the extreme ticks right at the open, it can lead to a decline throughout the morning when it's a high tick at the open, and then the ticks will slide down to the zero line and sort of move in a tighter range, and then at the same time the price will slide off from those highs. First 5-minute candle is a hammer. So that's bullish, but as we saw yesterday, bullish first bar, and then a little bit of a fake out before the market sold off. So we'll see if that's the same trend this morning here. Alcoa kicks off earnings next week. Things are moving pretty strong. Russell making a huge turnaround on this rally. Nice sideways consolidation. It's good to see these little consolidations on the run up, because that gives us a nice resting ground or support level when we pull back. When the market just goes straight up, there's really no opportunity for the market to pause. Back here, these sideways areas are helpful. Small lift in the VIX yesterday and Friday, but not by much. we go. Above the hammer into above yesterday, or at yesterday's high rather. So this is the point where I like to see, do we get the reaction and follow through, or do we touch and dip down, dip down? Looks like we're going to get that momentum here. And there it is, new high. To Michael's point this morning about assessing the context of the market and adjusting your rules accordingly, that's really how you want to train your brain to think, because there's so many situations in the markets that are slightly different, might look similar to something you've seen, but it's not quite the same. And you need to be able to take what you've seen and what you've traded in the past and be able to, in order to be able to make money on it in the future, you have to be able to assess, the likelihood that something is going to happen as it happened before. So because we are, you could say, well, we're near highs, and in the last couple of weeks, the market has really continued into new highs, and there hasn't really been a sign that things are going to slow down. So I'm going to take an opportunity to get into a long position at the first opportunity and see if we can get into another new high. And so using a setup that whether it's a retracement setup or a breakout setup like the first 5-minute play, to get into a trade based on just the context of what's happening, can be really smart trading. Apologize for not getting a recap video out last Thursday. We doing a remodel here, or small remodel, and I was moving our stuff back in Thursday evening, and I just got tied up and wasn't able to get a video out. A couple people were asking about the Vegas Traders Expo. I won't be at this year's, and I think it's in a week or two. But I'm going to try to get out to some of the Scottsdale meetup speaking events that they have, whether it's as a presenter or just a participant. Come out and see some folks. I got a handful of friends who come out and speak at those. So if you're out at any of those events, be a good place to grab coffee, especially if it's in January or February. Good time of the year to be out here. All right, so nice little double top up here. Not seeing a high tick, and I don't want to be overly bearish when we're at all-time highs, but broke the swing low, so at 25.50 225 could set up into some sort of short play, or it could just blow through and continue higher, but we have not touched the long, so the short is totally valid. And that's really the way that I go about looking at the markets, and is helpful in hindsight. So there's the 25, and we'll see if we just rip back up into new highs, or if there's anything there. But you know, the markets, you can kick yourself and kind of go back and say woulda, shoulda, coulda, but you really have to be able to take the information that you have and make that quick decision. And we were talking about this last week a little bit. It's easy to go back and second guess yourself after the trade begins, or after you get out of the trade, regardless if it's a winner or a loser. Sometimes there's opportunities that present themselves, and just like that 5-minute play that Michael was talking about this morning, being able to assess, make a decision with the information you have, and then committing to your decision. A characteristic of really great leadership is they make decisions and they stick to them. Quick to make decisions, slow to change them. If there's a decision that's being made, following through, making a lot of decisions. I'd rather make, if I had 10 decisions to make, I'd rather make 4 or 5 really, really good ones, but take a chance on the other 5, than make no decisions and just kind of mull over 1 or 2. Well, should I make the decision? Should I not? Should I make the decision? Should I not? Taking a step and seeing where it goes is often, I've found, I've had better results in the long run. Obviously, you have a little. It's kind of like, I guess you could relate it to shooting free throws, or just taking a shot in a basketball game. Period. If you're really, really focused on your stats, you could wait and just take good shots that you think have high probability, and pass on a lot of other shots. And you may only make 5 shots in a game, and hey, if you make 4, well, then you got 4 out of 5. Those are pretty good stats. But if you take 10 shots and you may make 6 or 7, well, on the whole, you've made more points for your team, and you've made more shots on the hole, but you've also made more baskets on the hole. So, it can go both ways. You want to kind of find that middle ground. You don't want to just take 1,000 shots in the game and be selfish, but you also don't want to just sit there and never take a trade, never take a shot. So here is our, when you get these counter trend trades, usually the negative 23% target is very tight and comes quickly, but it is an opportunity to tighten your stop above the swing low. So we've got a 53s. We can leave our stop right now and move the stop down a little bit to a I'll move it down to a 53, just one tick above the swing high, and then we'll see if this turns into anything or if it just kind of reverses and takes us back higher. The trading hours only, which we're coming into, should be a long here at recent highs, and so taken out for trailing in these kind of situations. So we've got, if you've got multiple contracts, taking off one by or half by trailing. If you've got 2 contracts, trailing versus swings, because we're in kind of a bullish context, would be okay. Being more aggressive because the market's moving counter trend. So what I would do there is just trail each candle's high until we get taken out. So 3 is kind of that magic number where you can trail swings, you can trail each candle, and you can still have one to take off at the target. So in the meantime, we'll just keep following this thing. So if you're trailing each candle, it's just as soon as the next candle forms, boom, I'm moving my stop one tick above the previous candle's high. So we've got a 50 25s. And I'm just rounding up to the next tick if it's an odd number like that. So still a small move, only 2.5 points, but a move nonetheless. And we have broken the halfway back of the morning, so kind of similar context to yesterday, or similar opening to yesterday. Started up and then get that morning sell-off. So see if it turns into anything. First 5-minute play still, if you made that variation like Michael was talking about, still a profitable trade, and the short also a profitable trade. So that's a perfect example of taking chances, taking calculated risks to see rewards. So you can tell the pace is slowing down a little bit. We've got 3 candles now moving sideways. So that 25, 50, 25s as a stop placement in case we reverse. You could put 1 contract there. If you've got another one left, then you can use that to trail swings. If you got 3. When I'm not a huge proponent of just throwing out an arbitrary like 1.5 points, but if you are a little concerned with the market or with the distance between the 50 and the 61 and want to lock in some sort of profit, you could use 1.5 or 2 points if you've got a couple of contracts just to keep that momentum going for the day. Sometimes it's more important to get your rhythm than it is to make an extra point or 2 on a trade. But when in doubt, trying to stay in the trade as long as possible typically yields the biggest profit, and the best way I found to do that is to trail my stop. And so if you're not sure, well, should I get out here? Ooh, the market's down at lows. Should I just get out? What I recommend is just trailing your stop above the previous candle's high and then just sitting tight. And then like this situation, okay, you might say, well, looks like we're going to reverse. We got a green candle, but the market didn't break the previous candle's high here and continued lower. So now we're down at a 25.50. And there's the break. So 52.50s down to a 25.50, 2.5 points on that, just that one little run. Now, if you've got contracts left, letting the market make a new low before you take your stop and move it above one tick above the next swing high. So let's say we sold off right here and broke lows. Well, then this would be the next lower high. But until we break lows, it hasn't confirmed that it's a lower high. It could just be, a bounce. And if we come around and draw up the short, we have it lining up close to the high from Thursday. 25.51s, 25.50.75s would be the next short, the larger 15-minute short, if you will, because it's visible on the 15-minute chart. And you'll notice that also, obviously our stop is a ways away, or the previous swing high is a ways away, but it encompasses that next short. Thus, one more reason that trailing the swings helps keep you in the trade longer. You can make fewer trades and have to get in and out less. Every time you put on a new trade, you're taking on the full risk. So now if you're in the trade and you're managing the trade, it's a good way to keep your risk down throughout the day, trailing your stop. Now because the long broke here, if the short breaks, that would be if the 51 short breaks here, then it'd be likely that we rip right back into new highs because all the people that, just like us, getting short, those stops would be taken out. And that should be enough. We're close enough where that should push us into new highs. Let me check this low here. 49s. Nope. We do not have a low ticket lows. So that means we could continue to make new lows. We'll just have to sit and wait. An extension, when we trade through a 61.8, an extension is drawn from lows down to lows, and a lot of times you will get a reaction there. It's a little bit higher risk trade because you're essentially already in a bear flag or a bull flag situation, but it can be used as a reference as well as an action point. But you see on the 5-minute big body candle, inside bars, bear flag. So a break of 49s is where I would take my stop from the previous swing high, which is all the way back up at the entry of the short, and move it one tick above this next swing high. But we have to break lows first. We have to break the swing low to confirm that this is the swing high. Or if the market double bottoms, that's another opportunity, but we won't know until a few more candles transpire. Here we do have a low tick, and that's one reason why I will tighten it on a double bottom. Not yet, but in a few more candles, if we get some green candles, okay, and we're going to continue lower. So watching the low ticks to see if we line up with a low price here. We're almost at lows of the day. Still up on the day, gapping up, but 25.48 is the low for the morning. So now taking my stop from one tick above the previous swing high, you can move it one tick above to a 50.75s. The great thing about trail stops is it takes all the woulda, coulda, shoulda out of the trade after the fact, because you're just following along with the market moves. And if the market takes you out, it's because we broke a swing high or a swing low, and the market could be changing trend. And if it's going to change trend, that's where it's going to happen. So it prevents, like the short. Well, we weren't short from the exact high, and that's okay. We let the swing low break. We let the market bounce and get short near highs. And if the market were to rally here, well, then we would get out near lows, and we would take the meat of the move. And in order to get that profit, you're entering at lower risk opportunities, lower risk spots. So I'll take a decreased risk for a little bit less profit compared to a lot higher risk by trying to get in, shorting at highs on the way up, or buying at lows on the way down, having more stop outs, and only, let's say we got in at 53s instead of 52.25s. Well, it's only 3/4 of a point. The extra point or 3/4 of a point is not worth the risk in my book. So now here's another potential for a lower high to form. We can see how we go back into traditional. So the extension does trades down just about to its negative 23% target. And a lot of times you just get one extension and then you go back into a traditional. But the extension is sort of a sign that, okay, we are extended at this point. If you're not in a trade at all, or when I'm not in a trade and I see an extension form, not that the market can ever continue when it's already seems to be low or seems to be high, but here we have 3 minutes after and 3 minutes after. So unless we break this low, not quite the low of the day. We do have a low tick in lows. So 49.25s trades and now breaking that low. So taking the stop from the previous swing low, 50.75s, I'm moving it down to 49.75s. And we press on. Nothing really on the news tape today. Economic news. And then Wednesday, Thursday, Friday, pretty standard stuff. Jobless claims Thursday. CPI Friday, retail sales, the usual. FOMC minutes tomorrow. But shouldn't be much. And down we go once again. So now we have a low tick at the low of the day and potential to continue down here. We're right near lows, but just making a note of that. Pretty much just like the last 3 days here. Friday, moved up in the first 30 minutes, sold off mid-morning. Yesterday, moved up, little fake out break, and then sold off. Now today, little first 15 minutes and got that reversal. It's usually 15 minutes in or 30 minutes in that we get that reversal, and then boom, that's what we got today. So drawing up the next short to see if it breaks. Now we have a low tick that lines up with lows. So if I was not in a trade, if it wasn't already short, I would not be taking this short just because of that low tick. We could trade it to 50 and sell off, but your probabilities decrease now that we're down at lows and we have a low ticket lows. So again, you have to be able to filter out the trade that you're in or the last trade that you took. You can't just make all your assumptions and change your trading strategy based on that one trade. You have to look at the probabilities on the whole. And so while, yes, this morning the 5-minute gap play yielded a profit to the upside, even though it was within because we were close to highs. I would really need to go back and look at a lot of situations where we were close to highs or close to lows and get some data on that. You can't just say, okay, every time now that we're close to highs, gapping, going to take that setup. So you need a little bit more data to make bigger assumptions with. But from what I've seen, just like the short setup, the high ticket highs or low ticket lows, double top or double bottom is very strong, that setup. Couple more points down to the gap. And another break lower, so stop. I'm moving from 49.75s down to 48.25s. And we press on. In a quick little dip spike here, we'll see if, and rise in the ticks, we'll see if this ends up forming more of a reversal and we finally get a swing break here. So now one tick, one bar here, 1 5/12 tick candle. Can go down again, one tick to 48s, getting tighter and closer to price, increasing the chance of getting stopped out, but from 52s, 52.50s, down to a 48s, we're already 4.5 points in. And we continue. Situations like this where you get a big run after a run, so to speak, well, you can do a couple of things. You can keep trailing the swings. You could switch back and trail each candle if you want. You could also, looking at the 5-minute chart, trailing each 5-minute candle's high puts us about the same place as the trailing swings. The long from, if you did take the 5-minute long and then simply reversed at the exit at the highest candle's low, you could trail 5-minute candles on the way down. But in the meantime, we now have 20 and 20. So we do have a low ticket lows once again. So good opportunity to take another contract off down here. And I'm going to leave the last portion at 48s, and that'll be the last of it. See if we're going to hold another extension. Getting a hammer and filled the gap. So if you had two contracts and took one off at the trailing each candle and then switched to swings as we move down, and then another big run, so you trail each candle, you got to feel good about that. So I am using the wick because on the tick charts, the open of that candle is the actual midpoint of the previous candle. So when I'm looking at the candle, I take into account the whole candle. So if I go up here in my Thinkorswim charts, the high and the low takes into account the wick as well. And so that's what I'm using to trail. So we've got that low ticket lows, and we also have starting to break the extension, first sign of bullishness after the run down. So I think the bulk of this trade is done. So the previous candle, 5 minute candle, has made its first break from highs. The high candle had a low of 51s, and then this candle's high was a 46s. And we do have that low tick lining up with the low of the day. So any pullback is a valid long. So we've got the low ticket lows. We have not broken the recent swing high, 48s, but a because we have that low ticket lows, longs are valid. The trading hours only is all the way up at the 48s as well. Likely to see a little bit more choppiness here as we've just seen in the last couple of minutes versus you kind of got this V reversal and then starting to finally get a little bit of back and forth. And drop the long. And we slow down. Getting a little reaction at the first long off of lows. Not breaking the swing. They're the anchor high. Broke the little swing high up here. So new high on the morning, all-time high. A little bit of selling, but still holding the bull flag. Haven't broken yesterday's low, so that's a good sign. We've got a low tick that lines up with low price and holding in a couple of longs now below us. Swing high, that most recent one has not broken, so we could still move sideways here. We kind of have a bear flag in this view and then a bull flag in the daily view. But Got a couple of decent moves on the day. The big short being the bigger one. So as we head into the rest of the week, and be looking for perhaps similar price action. If we break out early in the morning, I'd be looking for that potential counter trend trade, unless we get that nice follow through, that big body candle where we open up right away and continue on, where there's, every 5-minute bar is continuing the trend upwards. But I'd watch out 15 minutes in and 30 minutes in is when we've gotten those reversal bars. The negative 61.8 is only 20 points above us, and that could be a magnet as the 2600 as well. But pretty much going straight up from here. Sometimes when that happens, we can end up moving sideways for a little bit. We've got the shallow trend line, steeper, and now really steep. And so what happens is we break the steepest trend line and then drift sideways to the next trend line and then pull back to the shallowest one, and that ends up being the 50% retracement. Everyone panics, the market retraces, and then we end up going higher from there, and getting long at the 50 is that best opportunity. So at this point, the only short that I would look at would be the full halfway back. That's up at 48s, kind of in that bear flag, and sometimes we do have a little double top, but we've also got a higher low down here, and we have the low ticket lows. So I'll leave these two up for the morning, and we'll see which direction we end up resolving. But in the meantime, low ticket lows still have not broken the previous swing high, and so this is kind of the time of the day where we tend to move a little bit more sideways as we head into the lunchtime session. So good stuff though today, and oftentimes I get the question, well, how many trades should I take a day, or how many trades you take a day? And it doesn't need to be 10 or 20. You can take 2 or 3 trades and just hang out for a while, let those trades work, trail your stop, and oftentimes that leads to bigger profits than getting in and getting out for a few ticks here and there. So hope everyone has a great week, and we'll talk to you soon. Thanks, everyone.